So my goal for this video is going to show you one specific concept that is going to immediately increase your win rate trading my fair value gap continuation model. This one specific concept is going to be understanding the different types of deliveries from fair value gaps so that you can work out if it's a low probability, medium probability, or a high probability delivery so that you know you're taking the best trade possible. Now, this one specific concept has allowed me to be on a 12-week long win streak, taking one payout every single week with take profit trade-off. If you haven't seen my last video, I showed the emails there. This is now my 13th week being on a streak with take profit trader, taking at least one payout every single week. You can see 3 days ago, 20th of October, your payout request has been approved and it ended up hitting this week. In the bank account as well. This one was a little bit of a smaller one. It was around about $5,000, but you can see I refreshed the page. It is completely legit. It is from Take Profit Trader themselves. I already have 14 weeks on lock, so this is just a little bit of an understanding that yes, what I'm talking about is going to help you. So here I have an example of a bullish setup. As you can see, price has made a strong move to the upside, then price has now made a move to the downside. We've now hit this bullish fair value gap. This is exactly where we want to see price move out of this zone towards the upside, getting a candle close above the previous candle high. All right, and this is where we'd look to trade towards the upside for a nice continuation. So before we think about actually executing a trade, we have to look at the delivery first. So as you can see, before we mark out, our previous candle high and look for our close above to take it to the upside, we've got to look at our delivery first. So as you can see, I've marked out this bullish fair value gap, and I've also marked out the 50% value of this bullish fair value gap. Now, what you don't ever want to see is a candle close below that 50% value of that fair value gap. That is going to show a strength in sellers and a weakness in buyers. Buyers should really be stepping up at least at this 50% value or right here at the start of the fair value gap. This is also going to make sure that price is not going to trade ever below, and when it does close below that 50% value, it is likely to inverse or trade below this level, which is going to show something that we don't want to see, which is a weakness in buying momentum if we're looking to trade to the upside. So let's take a look at what a medium probability delivery actually looks like. It's very simple. Again, we have a bullish example. We have a move to the upside. We now have that pullback into that fair value gap. And before we can think about even executing a trade, we got to look at the delivery. So what is the different type of delivery compared to a low probability? Very, very simple actually. So as you can see, we have again marked out this bullish fair value gap, the 50% of this fair value gap. And now a medium probability is when we still get a candle close inside of this entire bullish fair value gap, but the candle close is above the 50%. Now, this goes for the length and the life of the fair value gap. If you ever look for multiple entries of the same fair value gap, you can never have a candle close below the 50%. Even if it's in the zone, it's still a medium probability delivery. It's still a good trade to take based on context, narrative, even setup alone. It's not the highest probability, but it's still very worthwhile taking. So that is a medium probability when we get a candle close inside of that fair value gap, still respecting above that 50% in this case for a bullish example. And now we can look for that price to go towards the upside and enter. As soon as we get that candle close right here, we can enter on that candle and go to the upside. Lastly, let's take a look at what a high probability delivery actually is. This one's very, very simple. Again, we get a nice move to the upside, we get that pullback down, but the difference is we get no body closures inside of the bullish fair value gap at all. It is only just a wick delivery, and this could be for 4 or 5 candles. As long as they're all wicks, this is always going to be a higher probability delivery. This shows a very, very good strength in buyers, especially when we wick into the gap. We typically spend less time around this general area. We spend more time wanting to go to the upside with momentum. So right there, you get that candle close above. That's our entry candle right there, our confirmation to enter the trade, our stop loss below here and here, wherever you want to put it. And then you can take that to the upside, knowingly that you're going to take a higher probability trade. So before we get into a couple chart examples, if you want to learn more about my fair value gap continuation model, you can click the link down below. I also trade live in front of over 100 viewers every single day. I call out all my trades, run you through on what are low probability, high probability, so that you obviously know how to follow along accurately. So if you want to do that, again, click the link down below. Otherwise, let's get straight into the breakdowns. So let's take a look at what a low probability delivery actually looks like. So right here we have a bearish fair value gap. We have a few actually, but if we look at price at this very moment, you can see right here I've marked out this bearish fair value gap. I also have marked out this one, whatever gives the reaction, and it actually ends up being this one. But what you can see is price has now body closed above the 50% of this bearish fair value gap. So before that was to happen, as soon as we tap that fair value gap to start right down here, I'd be marking out my previous candle low, looking for a trade. But unfortunately, because we closed above, I am no longer interested. A couple candles later, we did get that sell signal with good momentum, but we ended up chopping around. We didn't end up doing anything. And that was all literally due to that low probability that we would obviously avoid that. So that is something that you want to avoid. If you ever see that in real time, you are going to stop looking for trades. So let's take a look at what a medium delivery actually looks like. So right about here, you can see we've created a bullish fair value gap. Boom, we have now candle closed inside of that bullish fair value gap. That is exactly a medium probability. We're still above the 50%, so it's still a valid entry to take. It's medium probability, right? But we did close in the gap. Now you'd want to see price close above previous candle high right there. That is our confirmation entry. We even closed through the swing point, which is nice confirmation as well. You could take your entry there, and you can obviously put like your stop loss below here at level at maybe 30 points. And then you can target a 1-to-1 or these highs up here, right? And then you can play that out. And right there, we were able to join a trend pretty much as it was starting with a nice little pullback entry into that range. This is a very, very textbook fair value gap continuation right here. This perfect setup with a medium delivery. So now let's jump into what a high probability delivery actually looks like in real time. This is a high probability delivery right here. Again, we have a bullish fair value gap. Now I did not execute this trade here, right? For other reasons. I did take a short right here, right? I went anti-trend, which is a little bit wrong of me. I did lose 25 points on that trade. So I did do that on live stream. I was able to bounce back with this trade though right here. So as you can see, we had a bullish fair value gap towards the upside. If I play the next candle out, you can see that we've hit this level. Now, we never body close in the gap. In fact, we stay right on the start of it, all right, up on with against this candle wick. We only ever wick into this fair value gap, and then right there we get that candle close above that previous candle high, which is our confirmation entry. Our stop loss can go below this level, and we can target those highs over here as well. And right there, if I play this trade out, right, this was a much better execution. Both still have a great probability. These happen multiple times on a like daily basis on the 30-second. Sometimes on the you might find like 1 or 2 setups on the 1 minute every single day, but other than that, you will find a trade every single day on the 30-second time frame. No matter what, it just shows up every single day regardless. But if you are looking for that and you are trying to trade every single day, at least take the high probability, at worst the medium probability deliveries. Just stay away from the low probabilities as a whole. That was it for this video. If it was helpful, let me know down in the comments below. If you want more types of videos like this, let me know also down below. Like the video if you did enjoy it and it was helpful, and subscribe for more content. Otherwise, I will see you all in the next video.